How does health insurance work? Here's an example of how health insurance cost sharing works. Let's assume you have a health plan with a $1,000 deductible, 20% coinsurance, and a $6,000 out-of-pocket maximum. If you incur a $50,000 medical bill, you will first need to pay your $1,000 deductible. That would leave you with $5,000 in cost sharing left before you reach your plan's $6,000 out-of-pocket maximum. With 20% coinsurance, you would pay $1,000 for every $4,000 paid by your insurance company. What that means is that for the next $25,000 in covered medical expenses, you would pay $5,000 and your insurance company would pay $20,000. Out-of-pocket maximum. Once you've paid your $1,000 deductible and $5,000 in coinsurance, you've reached your plan's $6,000 out-of-pocket maximum. Altogether, with this $50,000 medical bill, you will have paid $6,000 and your insurer will have paid the remaining $44,000 in covered medical expenses.
Hi there, my name is Curtis and I'm with the Financial Architects. I'm a speaker for the Society of Financial Awareness as well, which is a nonprofit group dedicated to educating the middle class on financial loopholes, including investments, tax, debts, insurances. We scour high and low to find you the best loopholes out there, and if you'd like more information about that, please go ahead and click on the Financial Architect logo on the screen right now if you want to know more. Today I appreciate your time tuning into this webinar because we're going to take the mystery out of health insurance and Obamacare and show you actually how to save more money. I'm making this webinar because with the beginning of Obamacare, we've just been absolutely slammed with everybody wanting to know how to save money and different things and how it all works. And so that's why I'm making this webinar, is because I'm hoping this will be able to be more efficient and teach people about this. And then again, if you'd like to talk with us after this, our services are completely free. There's no charge to you whatsoever. So regardless of if you're for it or against it or whatever your beliefs are, the fact is that we all have to deal with it and get through it. My goal is to accomplish 4 things with you here in the next little bit. Is number 1, let's actually do an analysis to see what you actually need for coverage. I'm shocked at how no one, virtually, clients or agents, has ever done this. They usually just kind of get overwhelmed and pick a plan that they think makes sense. Number 2 is how you've been brainwashed into getting the wrong insurance for you. And number 3 is how Obamacare has mandated guaranteed coverage, but it's done nothing to actually improve the coverage. The huge gaping holes that have been the problems in health insurance have, if anything, just gotten even larger. 4 is going to be how to actually solve these problems and save yourself money at the exact same time. And number 5 is, if you want, I'll even show you. Some people have asked me, can they exempt themselves from Obamacare altogether? And the answer is yes, and we'll show you how to do that as well. So health insurance has become a game, and the problem is you haven't been taught how to play. Unfortunately, you've been kind of brainwashed into how to lose. And so that's what we're going to do here, is to teach you exactly how to play the health insurance game. If you're curious about subsidies, I'm going to do another little tiny webinar about that, so go ahead and click the link, and as soon as that's done, we'll get that up there for you. But I'm going to get right into it with this. Is the first thing we're going to do is we're going to do what nobody ever does, and that's do an actual analysis and see what your insurance is in fact for, or what do you need it to be for. And again, all this is free. There's no charge for any of our services. In fact, most of it I'm going to do right on this webinar with you. So if you could grab a pen and paper, I'm going to ask you some questions throughout this. There's going to be 3 main questions that I'm going to ask you, and I need you to write those answers down. If you do want us to develop a plan and show you how to save money, I will need the answers to those 3 questions so that we can actually customize your plan for you. So is your insurance for boo-boos or owies? The point I'm getting at is owies are, like the last time I went to the doctor, it fell right into our analysis we had done several years ago of what the average fees were in Orange County. We found that the average doctor visit was $62, and prescriptions were actually $30 to $60. Prescriptions have actually gone way down since we did this little study. The last time I went to the doctor a couple of years ago, I paid cash. It was for urgent care. I had an allergic reaction to stuff. It was $65 for the urgent care visit, and I paid a couple $100 roughly for some pills and some shots for the reaction that I had. So it was right in line with what we found years ago. So the question I have is, was that fun to come up with? No, it wasn't fun to come up with $260. But the reality is most people can do that, okay? That's what I mean by boo-boos and owies, or if you need penicillin for the flu or something like that. But if you got into an accident or had cancer or something, let's say it's going to cost $80,000 or $800,000, could you come up with that? And most people would say no. So the first question I need you to write down is, based on those descriptions, is your information, is your insurance for boo-boos and owies, or is it more for major catastrophe? Okay, that's what you need to factor and write down for me. And keep in mind, ironically, covering boo-boos and owies is more expensive than covering catastrophes, and I'll prove this to you in a minute here. So virtually every time I run numbers for clients for years now, we found the same results. There's no free lunch. The bottom line is a lot of people will call me up because something has happened. You know, their knee is going out, or they need this done or that done. And the problem is, if you're getting insurance for a specific reason, it usually doesn't make sense. What we found is to lower your deductible by $2,000 a year, it usually costs about $3,000 a year at least to do that, or about $250 a month. So simple math will tell you that doesn't make any sense, because you're paying a guaranteed $3,000 every single year to get a possible benefit of $2,000 a year. And the other thing you want to think about is, when's the last time you hit your deductible? For most people, they've never hit it, or it's been it's been many years ago. So why would you throw away $3,000 every single year that you might get $2,000 of back in benefits? It just doesn't make sense. So every time we run the numbers, that's what we find out. There's just no free lunch. You're not gonna, oh, I've got this problem, Curtis. I need to get health insurance today to cover this problem. It almost always costs more to do that if you're looking at a very specific problem, or if you're looking for it to cover everything. So I'm going to tell you a story real quick about what woke me up to how backwards our health insurance today is. A buddy of mine who had no health insurance called me in an emergency to take him to the ER. He was sick for like 3 weeks and wasn't getting any better. And after I picked him up, I was thinking the entire time, what in the world is he going to do when he gets there? Because I know he doesn't have health insurance. And to my shock, so I'll ask you this question: is when I took him to the ER, did they treat him or no? And most of you are probably saying yes. You know they treated him. I was shocked. I thought they were going to turn him away. I had no idea what to expect. This has been years ago. And they treated him, because that's when I found out it's the law. They have to. And fortunately, he was okay. He went home. They're going to send him a bill. He just was sick. It wasn't like a cancer or a stomach ulcer or anything like that. They sent him the bills, and he'll probably just ignore the bills. And what's the worst case scenario that's going to happen to him? Bad credit. Well, we all know people surviving with bad credit. The question is, who do you know that has lost their house or a car due to medical bills? That's right. You don't know anyone, because they're protected. And again, keep in mind, I'm not saying this is morally right or wrong. That's not for me to decide. That's for you to decide. I'm just telling you the facts, okay? And I'm trying to show the holes that are with our existing health insurance and with the Obamacare mandates that I was hoping was going to change some of the stuff, and it's not. So again, just the facts are that everybody today basically, even if you don't have health insurance, you're covered. You go to the ER, they cover you. They have to. It is the law, and there's not much they can do to get their money back out of you. That's fact. So going back to my story, fortunately he was okay. But now let's go on. Let's say he had cancer and he couldn't work for 9 months while he was doing chemo, or he lost his job. He can ignore those medical bills. We all know people that have done that, if you think about it, or even negotiate them for less than 10 cents on the dollar. We've all seen people that have done that. But can he ignore his rent or his mortgage? Can he ignore his car payments or his assets, or will he lose all that stuff if he doesn't make the payments? Can he ignore food for his kids, or can he negotiate that? No. And that's what we don't realize. That's what causes people to lose everything, or to have their kids become destitute. So what I'm trying to establish here is that we all been brainwashed into buying insurance, not just health insurance, that's what we're picking on today, but we've all been brainwashed into buying insurance that covers everybody else, okay? Your health insurance pays doctors. It does not pay you. Now, again, I'm not saying doctors don't deserve to get paid. They do. They do great jobs. But here's the question that you need to ask for yourself, because nobody except for you is going to look out for you. So if you were forced to, could you survive without health insurance and maintain a somewhat close lifestyle without your kids being forced on the street? Yes, you could, because we've already established even if something happened to you or them, they are forced to take you. They have to, okay? Bottom line, you could live without health insurance. Now, if you were forced to because you got sick, could you live without your income and maintain a relatively similar lifestyle where your kids were not on the street? No, you could not. So question number 2 is, I want you to think about this and write down, if you could choose only one type of insurance, would you choose normal health insurance that pays doctors? Or would you choose insurance that actually cut you a check and then you decide what you want to do with that money? And that way you could cover your bills, or you could do experimental therapies for cancer, or if you lost your income, you could replace your income with it. That's question number 2. Okay, so with health insurance, you should, really with any insurance, you should always focus on playing the odds, meaning the stuff that you can't afford to do on your own, okay? So here's the odds, okay? This isn't me. This is all taken from Harvard and CNN and different places out there. Accidents, there's $2 trillion spent today in health insurance dollars, or in health dollars, period. Accidents account for 8.7%. Critical illness counts for a whopping over 70%. Okay, and then the rest of the stuff, and critical illness, just so you know, is stuff that would take you out, like cancer, heart attack, stroke. Those are things that you typically would lose your job over, or need major time to recover, or large amounts of money to get through. And also, so you know, the average age for a critical illness is only 42. Other illnesses, that would be like, crack, meth overdoses, flus, or bad cases of pneumonias, those kind of things, okay? So what we do is we focus on, if you can see here, this 80% of the critical illnesses and the accidents. I mean, you still have coverage for everything, but we focus on driving the coverage up on the main areas here. Because the mainstream has had us focused on boo-boos and owies, doctor checks-ups, sniffles, labs, those kind of things. But because we're focused on those, the plans that we get have huge holes for the big things that could ruin us financially, or even worse. And let's talk about worse. What's worse than losing everything financially? Well, losing one of your family members' life that could have possibly been saved through methods or drugs that aren't covered by insurance. And this is the other point I wanted to talk to you about Obamacare. It's one of the frustrating things to me about all this Obamacare mandating stuff is they're mandating that plans be forced to cover everybody, no matter what their condition is, and they're mandating that they're being forced to cover these small things, and that's driving the prices up on all of us. But they're not decreasing the exposure on the big things like the critical illness or other types of therapies that are not covered by your health insurance plan. They are raising them, in fact, max out of pockets on most of the plans, and we'll talk about that in a minute here. And another thing, again, these things that are not covered that I'm talking about, is that even if you bought the most expensive, most comprehensive health plan out there, it doesn't, no matter what you think, it does not cover everything. We've all seen the fundraising jars for little Johnny at the gas station who got leukemia, okay? The majority of the time, Johnny had insurance. The problem is they're trying to raise money for experimental procedures or whatnot that could save his life that aren't covered by the plan. You've seen and heard stories of insurance companies that have been taken to court because they wouldn't cover certain treatments. Also, a great story is Lance Armstrong had terminal cancer. Is he alive because he had health insurance or because he had cash, not insurance? You're right. I'm sure everybody's saying cash. See, his insurance did not cover the Cancer Research Institute that he went to and saved his life. He had terminal cancer, okay, but he went to the Cancer Research Institute, and that's what saved his life, because he had the money to go there. His insurance would not cover it. So the big question that we're going into here is, what's the real healthcare crisis that we're facing in the country today? And here's the stats. I'm going to back all this up with a website you can go to that I got all this from. More than 62% of bankruptcies are caused by medical reasons. This is from a Harvard study. This is a 50% increase in bankruptcies over the last 6 years caused by medical reasons, okay? Most of the people who filed for bankruptcy were middle-class, well-educated homeowners. They weren't, the people you think of that were necessarily just completely broke. You're one illness away from financial ruin is what they found in this Harvard study. And private insurance, including Obamacare insurance, the typical health insurance today offers very little protection against bankruptcy. Okay? Why? Because 78% of all the people with a bankruptcy they studied had health insurance. Okay, so your whole thought process here and the whole political agenda of, oh my gosh, if you just had health insurance, no, that's not true. You would not be okay. They were bankrupted because there were gaps in their coverage that we just talked about that is not being mandated. They don't have to cover, or they lost their job and they lost their insurance. And this is all here. Here's where you can go to check it out. So again, which would you choose? Insurance for doctors or insurance that pays you? So with this in mind, I want to go through 4 points here that save you money and will get you better coverage. Okay, we approach it a little bit differently here. Number one, we feel like you should have a better health plan that's more affordable than is what being offered today, and also does a better job protecting us. We also believe you have to protect your paycheck, because that's the only way. Your income is the only way you get through anything. If you don't have your income, you can't keep your health insurance. You can't pay for food. You can't get better. Third is you need to protect your business and your family. What if you lost your income and or died? Either way, the same thing. You would lose your income. Your family would have their lifestyle and the rest of their lives be majorly changed. They would not be going to the same colleges, or you would not be able to help, your daughter who now is 6. You wouldn't be able to help in her marriage if you died or lost your income. This insurance makes sure that your family is still good years down the road. And then we also, again, because I'm a financial guy, of course, that's my background, we also look at preparing your financial future and doing that through all of this. So the first thing I want to talk to you about is, here is the typical, this is the plan. If you call up the Covered California right now and talk to one of the enrolling agents, which I would highly recommend you do not do, because they're not licensed, they're enrolling agents, but they're all trying to steer everybody towards plans that will ensure Obamacare has enough money to pay for all this. Because I'm sure that's what everybody's concerned about, is how in the world are we going to pay for all this? So they're trying to steer you towards the silver plan here that's on the screen. Okay, this is an example of one of the silver plans. What I want you to focus on is look at the max out of pocket here. What everybody focuses on when I talk to them, what's the deductible? What's the deductible? What's my deductible? Everybody knows what their deductible is, but I think I've met one person in the last 7 years who knows what their max out of pocket. That's what this MOP is down here, okay? This is individual and this is family. So the deductible, just so you know real quick, is when the health insurance company starts to pay. Okay, you still pay. That's what co-insurance. They pay 70, you have to pay 30%, but you still pay 30%. The max out of pocket, and you stop paying. So really, what's the most important number to know? When the insurance company starts to give assistance, or when you're done paying everything and what your max total exposure is? Well, I think everybody is on the call today is saying with me, your max total exposure, because that's what if something big happens, if a catastrophe happens, that's the maximum that you have to come up with. Okay? So what we do is we believe in going to 3 or 4 companies instead of just one to get your coverage. And just so you know, the worst case for the year, you see it down there at the bottom of the screen, by the time you pay, for an average person that's 40 years old, married, and has a couple kids, this plan is going to cost you $877. This is not the most comprehensive plan, and this is not the best plan or the cheapest or the most expensive plan. This is the plan that Covered California and Obamacare is saying everybody should get. So this is a run-of-the-mill what they want you to get. Your total exposure for the year with $877 per month, plus if the catastrophe happened to your family, you would be out of pocket $23,224, assuming that your health insurance covered everything else. Okay? So what we believe in is we go to a major medical plan, first off, that is not necessarily as popular, if you want to call it that, because it has a higher deductible, because most people don't even understand what their deductible is, but now that you do, we raise the deductible, but the max out of pocket is still the same, you'll notice, and it pays less commission to us as the agent. So it's not as popular or as well touted as a plan. And this is just the one I left on here from the last client. This changes depending on what your needs are and so on and so forth. But the reality is here that this major medical plan is a moving target depending on, your age and so on and so forth. But just as an example for the last client, as you notice here, the max out of pocket is exactly identical. The deductible has gone up, but that's about it. There's really not that much that's different. Also, if you are a Christian, there's a co-op that could save you even more money than any major medical insurance plan out there. It actually gives you even better benefits and can completely exempt you from Obamacare. So the point again I'm getting at is that we have options. I don't want you to read these numbers and think that's exactly what you're getting. I just want to show you the overall exposure, and this is the example that we did for the last client that we ran here. I'll come back to the co-op, the Christian co-op, if you want to at the end and give you more details about that. Then what we do, because we've saved so much money on the major medical plan, is we go and get other ancillary products, like if you notice dental insurance down here at the bottom of the screen, we throw that in. And then we also put an accident plan. And remember, 8.7% of the time, an accident is what happened. This accident plan covers your entire family and covers all of the bills that your major medical plan doesn't cover. So now in the case of an accident, even though this plan costs more than my plan, you've got a $100 deductible exposure versus over here, you've got, much larger exposure of $6,350. And then the most important thing, by absolutely hands down most important, is if you get a critical illness, we also give you paycheck protection, is what we call it, because a critical illness will normally take you out. Joe, the husband in this case, we gave $100,000 to, and his wife we gave $50,000 to. Okay, so if they had one of these critical illnesses like heart attack, cancer, stroke, and there's a bunch of other things it covers like kidney failure, losing a limb, being in a bad fire, those kind of things. Now, not only does Joe still have the major medical plan with this, obviously he's going to hit his max out of pocket. He still has the same exposure here, but wait, he got a $100,000 check, so he can pay his max out of pocket and still have $94,000 left over. So now who's in better shape? Joe, who's positive $94,000, or this person over here who's in the hole almost 20 grand because that's their exposure after paying all of this. So that's what we believe. So my question is, and please write, well, actually I'm going to come back to that in a second. What I want to show you is, remember the 80% that we talked about, okay? I just showed you a way to cover 80% better than what your more expensive health plan that you're being touted to get. Okay, so hopefully that makes sense. You'll have far less exposure for 80% of the things that happen to us. So, and my plan includes dental. Nah. Okay, so anyway, which plan would you rather have in the case of an accident, and which plan would you rather have in the case of a major critical illness, which are the main thing, 80% of what's going to happen to us? Most of you are probably saying this plan on the right here, which is what I advocate. If you want this plan, hey, we can get you that too, okay? But most people say they want this plan. And so which price do you like better? Do you like mine or theirs? And most of you are going, holy cow, you can get all four components for less? Yes. That's why we call it a loophole. It's nothing fancy. It's very simple. It's quite honestly just common sense. But as they say, common sense isn't too common, because we all do what our neighbors and coworkers and everybody else does, and everybody does what the media and insurance companies and the government are kind of corralling everybody to do. So again, if you haven't written your answers down, make sure you do that yet so we can help you. Does your insurance need to be for small things or catastrophes? That's number one. Number two is, which would you choose, insurance for doctors or insurance that pays you? And I also want to know why. And then number three is, which do you like better, the plan on the left or the plan on the right that I just showed you? Okay? And that's our plan. A final parting thought is, do you know how to guarantee you're going to fail? Well, by doing what everybody else does, because only 4% of Americans retiring today have an income of over $45,000. In fact, $45,000 is considered financial independence, believe it or not, to the government. This is based off a government study. So that's pretty sad. That's how you will guarantee you will fail, is if you do what you're doing all the same things that everybody else does. That's how you're gonna fail, and it's no wonder, because most people out there are working until they drop dead. So hopefully you understand here the main premise is that you should not rely on the insurance, but you should rely on yourself and your own cash. So backing that up, we like you to start building your own cash and not just having insurance. So what we do for most people is we take their savings. A lot of people, surprisingly, have no life insurance either, which is shocking, because your income is the sole, for a lot of people, that's what's keeping your kids alive. If you lose your income, they lose you, they're done. And again, most people care about their family, and they go, I can't afford life insurance. Well, okay, we're taking the excuse out of it for you, because now you will have life insurance to cover your family. And we also put enough of it away in a tax-free savings account, which again, we're telling you about other loopholes out there. Remember, that's what we do. Instead of investing it taxable like you do in your 401k and all those kind of things where you can lose the money, you cannot lose in these accounts. You can make as much, if not more, and you can access it at any age completely tax-free. Okay? This last client here would have had not only the death benefit, but would have had an extra $344,000 at age 70 that would have given him $36,000 a year, all tax-free, to age 100. Now, would that help him retire? Absolutely. The other thing that you can do is a lot of my clients are starting to use this to become their own bank, meaning unlike your 401k or your IRA or whatever, where there's all these laws and so on and so forth, you can access this money for whatever reason, anytime you want, no matter what. And you can actually access it via a loan, meaning when you take out a loan, your money actually does not come out of the account that it's invested in. So when I go buy cars, or if you invest in real estate or whatever, you can leave your money in this account, take it out while you're utilizing it as a deposit on a house. Or if you're into Jeeps or off-roading trucks like me, instead of paying cash and killing your cash, my money is still making money in these investments tax-free while I'm out utilizing it elsewhere. So again, I'm not going to bore you with this. If you have no interest in this, it's fine. But I just wanted to show you this is what happens when you get your health insurance in check, because we free up dollars that you could be utilizing for this. So what's the long-term cost of your current health plan? $315,000. That's $877 a month for 30 years, and that's if you don't get a rate increase. Yeah, right. Everybody has a rate increase every single year. But assuming you don't have a rate increase, that is the best case scenario. Okay? With our scenario, well, not only will you be out $315,000, but you're going to have better asset protection. You have accident protection, critical illness protection, and if you combine the savings with the health plan with whatever else you may have, you save for retirement years. The last guy actually ended up with $344,000, more than it cost him, and it gave him $36,000 tax-free in retirement. So again, if you agree with our points, then here's what we recommend you do to get much better coverage and save lots of money. Please click here or email me back if the link isn't up yet. I'm going to try to get this out here to everybody, but we're going to hopefully put up a link on this website. Click that, and you're going to get a questionnaire that we'll need, just a few questions to create your custom plan to save you money and give you better benefits. Okay, we can figure out if you qualify for a subsidy through Obamacare or not. And some people that will qualify for the subsidy actually will make sense for them to get an Obamacare plan. We can do that and still get you this additional coverage that you need and save you money. Again, if you're a Christian and you'd like more information on the co-op that gives incredible benefits at a very low cost, please click here and you'll get some more information about that. Again, the same components, we just use a co-op plan that saves you even more money and gives you better benefits instead of the major medical like a Blue Cross or an Anthem or an Aetna or Kaiser plan like we usually use. And if you'd like to learn more about the other loopholes that I was talking about, such as how to invest and never lose or how to legally live tax-free, please click this last link. Thank you so very much for paying attention and have a great day.